Hello and welcome back to the Retirement Mortgage Channel. I am Mike Baltazar, your host, and super excited to bring to you our very first example, seeing how the retirement mortgage can actually help somebody out and why. So in this example, we're going to take a 70-year-old homeowner who has 15 years left on their existing loan, on their existing mortgage, and they're on a fixed income. So far, this isn't too far out of the ordinary because this person, if they took out a 30-year mortgage when they were 55, 15 years later, they are 70 years old. And that means that when they took it out at the age 55, a 30-year mortgage, it wasn't going to pay off theoretically until they were 85 years old. And that's where the issue comes into play, because at 55, they were probably working. They had a great job with a great salary, but then, when you're in your 60s, you retire and then you go on to a fixed income. And if you don't have a pension, which a lot of American retirees do not, then you're relying on Social Security income. So in this example, we're going to assume that this 70-year-old has $22 a month of Social Security income, and they have a lot of equity in their home. They are equity rich. They're house rich. They have over $300,000 of home equity, but obviously home equity doesn't pay the bills. And if they're to take out a home equity loan to pay the bills, well, guess what? There's a monthly payment associated with all of the advances they take out on that home equity line of credit. So when they take out a retirement mortgage, as we'll see on the next slide here in a moment, the payment's going to go down to zero. As it stands right now, they are house rich and they have a required monthly mortgage payment for the next 15 years of $954 a month. And as you can see in this example, that's almost half of their income. And then that's where that big problem comes into play as far as retiring comfortably. Excuse me. So in this example, which is as of July 2026, and we're assuming that this is going to be a government mortgage, a government loan backed by the government, Federal Housing Administration, what they call the home equity conversion mortgage, the HECM. We also specialize in non-HECM proprietary products, but that's a conversation for a different day. Stay tuned. A video is coming for that as well. So after paying off what they owe on the home, putting it into a reverse mortgage and dropping that payment down to zero, they are already coming out ahead by $954 per month. They're eliminating that. Let's just say, for example, they had a car payment or maybe some credit card debt that they wanted to eliminate. In the example that we put together for this 70-year-old homeowner, where the home is worth $500,000, they owe $129,000, they could still access up to $18,000 up front if they needed it, if they wanted it. And then after having this HECM, this government version of the reverse mortgage, after having it for a year, there's an additional $18,000 that would be accessible at that time. Now, let's just say, for example, that they did not want to access any money up front. That $18,000 goes into a line of credit in case they need it down the road. And then that extra $18,000 a year from now gets added to that. So theoretically, it's $36,000, and then whatever it grows to, because it actually goes up. The unused line of credit does grow on a monthly basis, which is pretty awesome. But again, that's a conversation for a different day. What we're seeing here is how someone that's retired and on a fixed income can actually leave an extra $954 in the bank every single month. Imagine what they could do with that. They could travel more to visit family. If they wanted to purchase medication that they are deferring because they can't afford it, there you go. If they want to buy better food because now they have a little bit more to spend on themselves every single month instead of towards a monthly mortgage payment, towards a mortgage that may not pay off in their lifetime, you get my point here. And so this is the first of many examples that we're going to be bringing to you here on this page. And again, I don't want to take any time to talk about me and what qualifies me to share this information with you. I just want to share this information, pay it forward to you. That way you can start to get the sense of how it is working for so many people. But if you want an example specific to you, just shoot us a text. We actually have a hotline that you could text And you don't have to give your personal information or your name or anything like that. We're just going to ask for three basic things. What do you estimate the value of your home? How much do you owe on it? And what's the date of birth for the youngest homeowner? We need to know that information because the older you are, the more you can borrow. And the younger you are, the less you can borrow. And we'll talk about that, why that's the case in a future video. But you could probably make sense of it already. You know, the older you are, the less years you have statistically, and when there's not a required monthly mortgage payment, you get my point. But shoot us a text. We'd be more than happy to just share the information with you. We're not going to sell you anything. We just want to show what the opportunity will look like. And even though the government version of the reverse mortgage requires the HB 62, we have proprietary product options that could actually go down to age 55. So if you're watching this video, if you know someone that is 55 or older that would like to have an example scenario put together for them, we're happy to put that together. Feel free to call us, text us, email us anytime. My name is Mike, and thank you for joining us today. Have a fantastic day.